The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, thank you very much for taking time out of your day to spend with us to learn a new sales concept. It may not necessarily be a new sales concept to some of you, but it's always good to get some refreshers. Today's sales concept is going to be on annuity maximization. Before we get into that, I just wanted to say hello to any new agents that are checking URL out for the very first time. My name is Matt Alina, and I'm one of the agent support specialists here. We provide marketing and sales support here for any of your life insurance cases, whether it's for traditional life insurance or even for final expense whole life plans. You can contact me. You can also contact my partners in crime, Steve Clemens, who's the Vice President of Life Markets, or Joey Fry. When you do business with us here at URL, we are a full-service brokerage, and I would be, I don't want to forget to let you know that we do life, we do health, we do long-term care and Medicare and annuities. We do everything but P&C and securities. It's probably easier just to say that. But when you do business with us, you will also have a case manager assigned to you. For agents with last names A through L, Rosemary Evans is your case manager, and agents with last names M through Z, Rachel Cook is your case manager. And then when you do get licensed with us, the person that will be processing your licensing will be Judy Warner. You can reach us toll-free at 800-WANT-URL. That's 800-926-8875. And you can also find us on the web at urlinsgroup.com. We'll get into our website in a little more detail in just a little bit. Your case managers will scrub applications for you. They'll order parameds. They'll assist with ordering APSs. Basically, they'll follow the case from submit to issue. They'll also help you with any in-force policy, and sometimes they'll help you with some basic term proposals, term life proposals, and make some underwriting suggestions as well. As I mentioned before, my partner in crime is Joey Fry. You can reach me at extension 141, Joey's at extension 157, and then Steve Clemens extension 132. I mentioned our website. Our website is a fully comprehensive website where you can basically get quotes, you can get forms, you can get sales tools, brochures. It's all available there. For those of you that are new to URL, you can feel free to use our temporary username and password. Our temporary username in lowercase letters is people, and our temporary password in lowercase letters is business. And that, again, will get you into the website, and you can run some quotes, you can get forms, and some other sales tools. When you do business with URL, and you'll have your own exclusive username and password, and that way you'll be able to check case status, commission statements, and so much more. As I mentioned, on our website, it is a full-service website. It's available 24 hours a day, 7 days a week, 365 days a year. You can run term quotes and guaranteed UL quotes. You can get forms and a whole lot more. So that's available just with a click of a mouse. And I'm kind of thumbing through because I wanted to talk to you a little bit about the Gemini Partnership Program. The Gemini Partnership Program has been introduced a little over a year ago. And the Gemini Partnership Program is basically a partnership program on steroids. We know that you have options when you're doing business with other brokerages. What we would like is for you to give us your business, and in return, we're going to be giving back. We give back with what we call our Gemini guarantee, where you earn the best commission. If you're getting a better commission through another brokerage, let us know. We'll match it. Exclusive quarterly bonuses. We also have exclusive lead programs, different business technologies that are going to be offered only to our Gemini partners, free E&O. We'll also have Gemini Jaunts. We just released some information about our Gemini Jaunt program, basically a weekend gathering at a real nice resort. So check your emails if you're already a Gemini partner. check your emails about that. And we'll also have other programs and benefits throughout the year and exclusive training throughout the year. So that's a little bit about the Gemini program. You can learn more about our Gemini program by going to our website, or you can feel free to contact any of us here at URL, and we'll be happy to answer any questions that you have and provide any additional details that you need. Now, one of the things that we do here at URL is we try to come up with different sales ideas and concepts, pass some sales ideas and concepts along so that we can help you become successful. And one of the sales concepts that we're going to be talking about today is annuity maximization. A lot of people think that life insurance is only to provide an income should somebody die. But life insurance can also be used to help with wealth transfer. Your clients work very, very hard, and they've built a nice nest egg, and they may have their money tied up in annuities. But there's some ways that people are always trying to find ways to avoid paying high taxes. And the annuity max concept is going to be a way to help you help your clients pass more money on to their heirs. So at this time, I'd like to welcome Kim Grund. She is the Sales Development Specialist at North American Company. And Kim, good morning, and thank you very much for joining us.
Well, thanks, Matt. Good morning, everyone. I'll get started here. Okay, can everybody see my screen? Are we good, Matt?
We're good.
All right. As Matt said, I'm Kim Grund. I'm Sales Development Specialist here at North American Company. We're a longtime partner of URL, just an outstanding MGA with North American. Like I said, we've had a long time partnership. Today, the title of our presentation, our sales concept that we're going to talk to you about today is annuity maximization. And so as we go through this presentation, I encourage you as agents to think about those clients that you work with every day and think of clients that might fit this sales concept as we review it. So what is annuity maximization? For those clients that do not expect to need funds in retirement, what annuity max is really leveraging those assets that are currently in an annuity and moving them to life insurance. And this is going to provide them a greater benefit for their heirs at death. So here's what our agenda is going to look like. We're going to talk about scenarios when annuity max is the right sale for your clients. Then we're going to talk about things to consider. We'll discuss a few things that need to be considered in this sale. And then we'll go over a couple different types of clients. We need to consider the client's objectives and what type of clients we have. So as far as our scenario, as we indicated earlier, it's those clients that have surplus assets. Maybe these are assets that are in an annuity laying around. They probably don't need them. They want to share their wealth with their heirs. And like I said, they currently have there's a lot of people who do need to use all of their retirement assets. However, we've got a lot of clients that have surplus assets, and they don't want to spend everything in retirement. You've probably heard the cliche, you can't take it with you. So you may as well leave it to someone you love, right? For a lot of our clients, leaving their money to their children or their grandchildren, this is a lot of times a common goal. So many of your clients have used annuities as savings vehicles. And some of your clients may no longer need the money in annuities for themselves. Instead, they plan on passing that money on to their heirs. So to maximize your client's annuity dollars, one strategy is to purchase a life insurance policy with the annuity funds. The beneficiaries of the policy would then be paid generally tax-free death benefits and avoid the taxes associated with inheriting those annuity funds. Even the best financial plans can run into some unforeseen problems with taxation. that could leave your client's heirs with less than planned. So by using life insurance to maximize these annuity funds, you can help provide your clients with the most value for their annuity funds, and then without the limitation of income or estate taxes. We're going to move on to things to consider. We're going to focus on 4 different areas: moving the funds, taxes. We're going to talk a little bit about irrevocable life insurance trusts, and then also the client's objectives. So there's several different ways to move money from an annuity to life insurance. Lump sum, that might be ideal if the client wants to maximize the amount to the life policy as soon as possible, which is going to purchase a larger amount of a coverage. The client also may want to capitalize on the current income tax or gift tax rate. Another option would be the withdrawal approach. This could be beneficial because it does allow the annuity holder to maintain control of the assets in case of an emergency. However, the client will have given up the guarantee of an income stream for that control. Another advantage of taking withdrawals is if the annuity is still in that surrender charge period. Annuitization, a real common approach using a short-term time frame. A short time frame could be an advantage if the goal is to complete the move quickly, and then the life policy can take advantage of the immediate premium funding. It also can be annuitization can also be an effective solution for funding life insurance with Annuity Max. And then just things to consider: taxes, surrender charges in the annuity, and also the insurance performance. If the ultimate goal is going to be estate building, then life insurance performance should be the primary concern. And then the means of moving that funds is going to provide the largest death benefit will likely be the main objectives here. Other things to consider: life insurance policies, they do have cost of insurance charges and other policy fees. You always want to make sure that the client is aware of these fees that could affect their policy value. Underwriting is another consideration. For any life insurance contract, our client's going to have to be insurable and demonstrate evidence of insurability. Also, most life insurance policies have a surrender charge, which could limit access to some of the account values in some of the years. Although the death benefit is a primary concern, they need to be aware that access to the account value may be limited due to charges. Modified endowment contracts may be a concern as well in some circumstances, as there could be tax implications. However, for death benefit sales, such as Annuity Max, the death benefit is the focus, and that would be generally tax-free, regardless of the MEC status. So anyone with a universal life policy that includes non-guaranteed elements should be encouraged to conduct those regular reviews, including their illustration, and then also requesting in-force illustrations as necessary. Just want to make sure that the client's on top of what's going on with their life insurance policy. Then take a little closer look at taxes. We already talked a little bit that annuities are potentially income and estate taxable. Income tax is more than just federal. It could be state income tax as well. So if you're doing calculations, don't forget to include that in your figures. For estate taxes, there's also a state estate tax in many locations as well. Although the federal exemption may be the $5.25 million, many states have retained their exemption amount at $1 million. So these are things to consider. And then also, just for your information, and I know Madalena has this information, Linus Sugis is an attorney that's on retainer for North American. The name of his firm is Advanced Underwriting Consultants, and Linus is just a great resource that's available to all of our contracted agents with North American and to URL. And he is definitely available to all of us for tax and estate questions. So feel free to contact Matt or Joey at URL if you'd like to have further information on any estate tax planning issues, income tax guidelines, those types of things. Linus is just a wealth of knowledge. So what about an irrevocable life insurance trust? If the client has an estate tax issue, an ILIT could be a very effective solution because it can get the value of the life insurance policy outside of the estate to avoid taxes. And with an ILIT, you do give up some control. The client no longer has access to the money. Sometimes the client doesn't want to give up control even if there is a potential estate tax issue. And that choice is theirs, obviously. Funding is another issue to consider. In 2015, the annual gift exemption, or the amount that a person can give another without a gift tax, is $14,000 a year, and that, I just looked that up, that remained the same for 2016 too. So that's itemized for inflation, so it will likely grow in future years. So that $14,000 figure is per giver, per recipient. So if a husband and a wife want to gift to an ILIT, they can each give $14,000 per year for a total of $28,000. ILITs also can have multiple beneficiaries. So for example, an ILIT may have 3 beneficiaries. Therefore, the gifting limit would be multiplied by 3. So a single client could give $42,000 per year to a 3 beneficiary ILIT. Or a married couple, it could be $84,000 a year. Those amounts would often cover distributions using an annuitization funding solution. But what about a lump sum transfer? Don't be afraid to suggest using some of the lifetime gift credits. The client can give up to, in 2016, this is now changed, it's $5.46 million in excess of the annual gift exemption during their lifetime. That's what it's there for. Ownership, that's another issue to consider since life insurance doesn't have to be owned by the ILIT to avoid estate taxes. The client simply may want to have the the policy owned directly by the heirs. This may not provide the level of control that can be achieved by a legal trust document, but it certainly could be a solution that's smoother and attractive for some clients. So we need to consider the client's objectives. You know, what kind of client do we have? And basically, we've got a couple different kinds of clients here. We've got those that have the death benefit as the sole objective. They want to maximize that benefit for their heirs. And we've also got those who prefer access to cash value as a primary goal, along with the death benefit. The first client is likely our committed Annuity Max client that has no need for funds. A lot of times, these are clients that have a larger estate, and they may or may not be looking for a possible estate tax solution. And the second type of client who prefers access to cash value, much more common. They like the idea of Annuity Max, but aren't totally committed to parting with all of that money yet and would like to retain control and maybe some access to the cash value. So let's look at our first client that has the estate taxable scenario. This client will consider an ILIT if it's possible to minimize those estate taxes. We're going to use a gifting limit if possible, but amounts that exceed that will use some of the client's lifetime exclusion. We're going to use North American's Custom Guarantee Universal Life Insurance product, and this can provide a high death benefit amount that can be guaranteed up to whatever age the client desires. Now, this is all about guaranteed death benefit all the way through age 120, little or no cash value accumulation. This is going to buy the most life insurance for the dollar. So let's look at our first case study here. We've got Mr. Big Estate. He's got lots of different assets, one of which is a fixed annuity. It's got a value of $250,000, and it's got a basis of $125,000. He has a large estate, and he is in the top tax bracket. He is committed to the plan. He has no need for these funds other than to pass them on to his children in the most efficient manner. And so his goal is to maximize his after-tax estate size. So in this case, the life insurance policy is going to be owned by the ILET. Next, we need to determine how it's going to be funded. So after considering a couple different funding options, including single pay and 10 pay, we've determined that the best option for this client is going to be a 10 pay. So the death benefit that was achieved for this client is $521,373, and this is guaranteed to age 120. And here's the illustration. Realize it's a little bit difficult to look at or to see maybe on the screen, but this is showing how we can convert his $250,000 taxable annuity into an after benefit for heirs of $521,373. We look at this little graph here. Our client would have to live to age 92 to not do better with life insurance, and this is assuming a 3.5% annuity growth rate. Pretty compelling here. So now we're going to take a look at another client, our second client, totally different objective, or maybe we might call it a split objective here. We're going to call her Mrs. Next Door. She's not totally committed to the plan. She wants to retain some access to cash surrender value. She wants both access to value and the death benefit. The custom guarantee with those rapidly diminishing cash values is no longer an attractive option for this client. But we can take a look at our Rapid Builder IUL. And this does include the waiver surrender charge option. And this is going to allow for early cash value access. The client can also look for projected cash value growth at the same time, still providing that leveraged, generally tax-free death benefit with our life insurance. So Mrs. Next Door here, she's got a $75,000 annuity. It's got a $40,000 basis. She's got a relatively small estate, doesn't expect estate taxes to be an issue for her. She has no need for funds, would like these assets to go to her children. So Mrs. Next Door would like to see the benefits of Annuity Max. So again, this is not an ILET situation, so she'll own the policy individually. Funding might be a little different since there could be some cash value growth that she may consider accessing. And then we want to make sure we do avoid a modified endowment contract. And because we want to see a quick access to cash value, we're going to want to fund that life insurance policy as fast as we can. So typically the best solution for this scenario is going to be a 5-pay annuity. So for her case, it comes down to $13,064.99 a year after tax, which is going to provide for life insurance death benefit of $159,290. And that's when we're solving for the minimum non-MEC. And you might say, why minimum? Well, she's got a goal of cash value as well. So if we solve for the maximum death benefit, the cash value will eventually run out. The minimum death benefit's still going to leverage her amount for heirs, but make for a little bit more compelling illustration here. So here's the illustration on the Rapid Builder. Just taking a look at some interesting features here with the Rapid Builder. We've got the waiver of surrender charge with table shave. So this is going to do a couple things for your client. The waiver of surrender charge means more access to cash surrender value during what would be the surrender charge period. So that's the first 14 years of the policy. Secondly, this option includes a table shave feature. So it can be more effective for clients who maybe are a moderately substandard table 3 or better. Also, can't forget about living benefits here. Living benefits are available. So for the client who may decide to keep access to money, this is a great talking point. Why may she need that money? Rather than just getting cash value for a qualifying chronic illness, she can accelerate a portion of the death benefit to get an even larger amount during her lifetime when she needs the money. This could be for chronic, critical, or terminal illness. As far as early cash value, This is really effective when we've got the waiver of surrender charge option exercised. Over 5 years, she's put in $65,324.95 and is projected to have that amount or more by the end of the 5th year. And if you look at the middle column there, if she gets at least a 4% return, at the end of 5 years, the surrender value is $63,000. At the end of 10 years, it does start to diminish a little bit by $60,000. If she gets 6 3/4, in the first 5 years, that surrender value is over $69,000. In 10 years, it's over $79,000. So very attractive. And then cash value is growing so well in this scenario with a minimum non-MEC that we have reached the corridor by age 90. And then at that point in time, the death benefit actually begins to grow. So here the graph, the blue line represents the assumed annuity growth rate after taxes. The green line shows the cash value of the life policy. Initially, it doesn't match the annuity returns, but it sure does shadow that growth nicely early on, and then the potential to outpace that annuity in those later years. We're getting significant leveraged death benefit in those first 20 years, while the death benefit grows with cash value in the last 10 years. So the client's going to see the death benefit and the cash surrender value, which will show an attractive return. And here we did use an assumption of a fixed annuity return. An indexed annuity may or may not have different results than what we're using here. But we did assume, again, a 3.5% annuity growth in this example. So just to summarize what we looked at here, we looked at our scenario. We defined what annuity max is. We also talked about things to consider. We discussed, estate planning, control, and funding of the policy. We also talked about the type of clients. We talked about Mr. Big Estate and also Mrs. Next Door. So bottom line here, our client gets the leveraging of assets that are maybe sitting around an annuity that could really recognize a taxable event when you want to pass them on to the heirs. And so if they've got an annuity sitting around that they really just want to leave to their heirs, you as an agent might discuss that when you're going through a needs analysis, asking them, what you plan to do with that annuity, and see if you can't leverage that into a larger asset of life insurance for the client. Life insurance can also give them access to cash value if needed. And bottom line in the end, as far as life insurance, a higher payout to the heirs. You as an agent get competitive products at North American that are going to be able to help you meet your client's needs. North American has wonderful marketing materials to help you with your sales. We've got a marketing website that's got all sorts of PDFs with every marketing piece that you can imagine on over 13 different sales concepts, and one of them being Annuity Max. We've got marketing brochures, client brochures, checklists, worksheets, videos, you name it, to help you with your sales. We've also got customized postcards. If during the presentation you were thinking of some clients that you think might be interested in this Annuity Max sales concept, that you might be able to help them, what we'll do, if you're a contracted agent with North American, we will actually customize these postcards free of charge. You just need to put the labels and the postage on and send them out to your clients, follow up with them, schedule a time to meet with them, and there's a potential sale for you. So, and these postcards just aren't any other postcard. They're colorful. They're really attractive as far as helping you with your sales. And you can contact Matt, or you can contact us here at North American. We'll sure help you get that taken care of for you. So here's your homework, and Matt's going to be following up with all you guys and women. Identify 3 clients. Call them by the end of this week, even by the end of next week. Maybe we can get some postcards ordered for you. Position North American's products as a solution for the Annuity Max sale. back to you, Matt. Do we have any questions or anything from anyone?
Sure, we'll be taking some questions here momentarily. Let me put our contact information here on the screen. Just for those of you who are on this call today, feel free to type your questions. I'll be happy to read those questions aloud and get those questions answered for you. For those of you that are watching this recorded presentation, here's our contact information. We're here to serve you and answer any questions that you have. So feel free to contact any of us for any marketing and sales support. You can contact me, Steve Clemens, Joey Fry. We're here to help you with your next life case. And then, of course, for any of you that have any pending cases, again, as I mentioned at the beginning of the presentation, Rosemary Evans and Rachel Cook are here to help you with your pending applications. So our toll-free number is 800-WANT-URL. That's 800-926-8875.